Hi everyone, and thanks for checking out my channel. I'm going to do a market analysis for natural gas tonight, looking at what could be supporting a bullish scenario and what could be supporting a bearish scenario for the coming week and potentially beyond that. So yeah, let's get started. So looking first at the bullish side of it. So what we got, looking at the quote report, we had managed money accumulating long position, as we can see here, which is quite significant, actually almost topping 30k contracts, and they are still sitting on net short but reduced. So I think it's something to keep an eye on, because with the price dropping, it's not actually really going into the for continuation of the on the downside. So definitely bullish for this point. Now something else we having also is the WTI that is potentially moving further down for further consolidation towards 34. So I made another video if you're interested on the WTI, which I believe is a likely scenario. Usually there's a correlation or inverted correlation between WTI and natural gas. So when one is moving up, the other one is moving down, and quite often when WTI is moving up, natural gas is moving down. So no, WTI is likely to go down. It doesn't mean natural gas will actually go up, but the correlation is a bit less strong in that direction, but still something to keep in mind. Should WTI start moving down, it might actually bring support to natural gas. The other argument is more something about what happened, and that's the bear flag we had. I've traded last week, reached the target. So we can see here that's big rectangle here that I did position at the start of the new contracts, and setting down at the lowest point here. And when we report this to the previous end of the contract, and we had that target at 1.46 for the bear flag. So the bear flag, just draft it a bit clearer here, was actually use that nice purple one I used last time. Well, yeah, going down here, so we had that pole here, then we had the flag building in this area, and the drop at the breakdown here that did actually show the support. So the basics just reporting the pole at the bottom here. So roughly, I mean, it's a bit lower actually. Move that here. So 145 was the target. In terms of the percentage drop, we basically got to that point. So I can remove this now. It was just indicative only, and only valid for the previous contract, so not relevant anymore. But that point here at 153 is can be considered as being the target achieved, so potentially we could have a rebound from here. Now the other one is of course that the July contract was under significant pressure, did close, and we can see now that it's only a few contracts to trade, so it's not going to add much pressure on the downside, so that's definitely a positive moving forward. Now looking at the bearish side, which I think is still much stronger, we're starting with the increasing open interest that we can see in the quote report. So looking there, we had managed money increased long position, but the open interest still very strong, and 10k contract added, while we've been clearly going down. So from that point we're sitting at 161, and dropping here almost yeah, quite almost 10% I believe from the top, 162, 160, yeah, pretty much, but definitely going down. So that's supporting continuation of the trend down with here. So now we had that continuation of course with that move here, so it's a little bit hard to actually get that as being some solid support, but it's still pointing to some strength in terms of the trend. Now the other one that is very bearish in my opinion is UGAS, which is the ETF 3 times leverage long position on natural gas. That's the listing by the 10th of July. It's been announced on the 22nd of June. So if we report to UGAS here, so we can see from the time of announcing that that they will actually stop trading it. It's been actually sold off significantly, which is actually normal. The reason why I think it is still bearish is that we can see that huge accumulation we had over October, basically winter last year. It's a massive volume here, but in comparison, the volumes we had here is still not that big. So I'm expecting that many of these position on the ETF will still have to close, and usually you guys is holding the next contract, so the pressure will be, I believe, on August contract mainly, which is very short term, so it's not going to help with the spread, not going to help with the with actually stopping the price to go down. So that's a big negative in my opinion. We will see a bit better in 10 days, but 10 days is a long time, especially in natural gas, so I believe selling pressure will actually come from there. Almost no doubt about this. The other one that is extremely bearish in my opinion is that we still have no sign of reversal. So we look at the chart, strong momentum here, so we're sitting on the 4 hours there. We have that bear flag forming at 153, and we can see that the momentum is full strength. There's no sign of divergence, nothing really that we could actually use as a loss of momentum of some sort of a capitulation or trend exhaustion or something like this. To me, that's there's absolutely no buy signal, that's for sure. So yeah, definitely not good. One more point that is bearish, my opinion, is that crude oil production is ramping up. We've seen that again in another video on WTI, but should they start producing again in the US WTI, and then we'll see natural gas production increasing as a byproduct as well. That's definitely a risk, and I believe that we might have actually hit some sort of a floor in terms of the production for now. That's definitely not helping the price. Now, looking at the spread between contracts and the futures, so August, September has increased, so it was dropping below 2 at some point, and we are back above 3% between August and September. That's definitely not good, and because of the reason pointed before, we're going to see that spread likely increase again. That will put again selling pressure on the August contract and potentially having the same sort of gap when we will gonna get near the end of July. So again, very bearish in my opinion. We can see here it's sitting off October at above 1.70. That's almost 7% between September and October. That's a lot, even for pre-winter contracts. It's just too much contango that will put a lot of pressure again on the price. And now the final argument, I think it's also very important to keep in mind that the retail traders are starting to position or thinking about positioning for winter spike, which means they are accumulating natural gas. So to switch on the daily probably here, starting to accumulate because of the low price, and this is a very risky strategy because of the contango, but also because as the traders are actually accumulating long, they're getting actually squeezed out and have to actually sell their position, which is actually feeding the move down. So definitely not helping at all, and I don't believe that starting to accumulate from here is a safe bet because of the contango, and also absolutely no certainty that the natural gas will actually pick up and do any rally in winter. We just have no, we can just kind of time this yet. It's way too early, so that kind of accumulation could actually work against the long position. So yeah, no, having said this, again, the bearish side to me is much bigger, so that's my preference here. Definitely not trading long, except if I've got some strong signal potentially here, if we can get a nice divergence, but even then we have so much resistance on the top and so many reasons for the sell-off that I would just not go for it. And the two scenarios I'm going to trade, first one, scenario one, bearish, of course, downtrend continuation. I have a target of 1.35, which is that point here. It's been taken being a low of 2016, I believe, so we'll have to go really far away. So we broke some major support here on the 155, and mainly we broke this just barely because of the the gap we had between the contracts, otherwise we would be much lower already. So to me, we're entering another leg down, very likely that will be fed by all the long position closing, forced closing by you guys delisting, but also by long position that had to actually close because of the continuation of the move down. So that's my likely scenario. So if we look at the first one, scenario one is entry point at 160. So actually I don't believe we will actually break like this, but potentially we may have a bounce back here, and then I will look at a short entry here for that target down here. Of course we could have that move, so that's my scenario 2 here, which is pretty much the same, but looking at a bit higher in terms of the entry here, potentially retracing up to that trend line here, which is at 166, 65, and again breaking down to that level 1.35. So yeah, that will be the trade for next week. Potentially we could get that done pretty much within the next coming days, should the drop pick some momentum. I'll keep an eye on this, of course, and look for clear signal that we are reversing on this, so either shooting star or something similar, and of course divergence will be key on this, because of course break out is always possible. The analysis can be wrong and it can go the opposite direction, so we need to think about that as an option and just make sure we don't actually expose ourselves in a bad trade. So yeah, that's all on natural gas. I hope you enjoyed that video, and yeah, I'll do another check midweek, and until then I wish you safe trading and speak to you soon. Bye.